Hi friends, I'm Rebecca. Welcome to Squintillions. In this video, I'm going to tell the story behind the best buy and hold investment I currently have in my personal E-Trade account, not the account I'm using for my REITs experiment. This video has been created especially for beginning investors who might not have a lot of money to get started investing, or they have other plans with their money, and so can only commit a small amount for investing. I'm going to give you an example of why it is worth getting into the stock market. Let's see if you can figure out what company I'm talking about based on how they describe themselves on their website. No cheating by looking in the description or the comments. This company pioneered the pure-play foundry business model when it was founded in 1987 and has been the world's largest dedicated semiconductor foundry ever since. The company supports a thriving ecosystem of global customers and partners with the industry's leading process technologies and portfolio of design enablement solutions to unleash innovation for the global semiconductor industry. With global operations spanning Asia, Europe, and North America, this company serves as a committed corporate citizen around the world. The company deployed 281 distinct process technologies and manufactured 11,617 products for 510 customers in 2020. One of their big customers is Apple. This company is the first foundry to provide 5-nanometer production capabilities, the most advanced semiconductor process technology available in the world. Do you know which semiconductor company I'm talking about? It's Taiwan Semiconductor Manufacturing Company Limited, ticker TSM. It was among my earliest investment choices when I first began to become interested in investing in the stock market. I remember at the time doing research on about a dozen companies. I still have the spreadsheet I used. I had $900 that I was going to invest in the stock market. I'll be honest, I didn't really know much about how to analyze the fundamentals of a company back then, or anything about investing strategies. I knew buy low, sell high. I did record a few figures, including the 52-week price range, the PE ratio, and the earnings per share. When I did my research, the 52-week range for the TSM share price was $8.68 to $12.93. The PE ratio was at 20.53, and in comparison, the current PE ratio for the semiconductor manufacturing industry as of January 22, 2021, according to MacroTrends, was 41.26. The EPS back then for TSM was 45.5 cents. The trailing 12-month EPS for TSM now is $3.38. One of the main reasons I chose this company was because I knew that semiconductors were used in mobile phones and laptops, and I could foresee the growth of these markets in the coming years. That was back before tablets were a thing, so that was an added benefit of holding the stock through the years. I bought 32 shares of TSM on June 9, 2004. I did mention this was a buy and hold at $9.37 each for a total price of $299.84. This is exactly how you can get started in the market without having to put a ton of money in at once. Find a company that has good growth prospects that is meeting a market need and just get started. I later picked up a few additional shares for free due to the stock splitting, and there was some sort of adjustment downwards of my original buy price. If anyone can explain that one to me, let me know in the comments. Unfortunately, I didn't have dividend reinvestment turned on, or honestly, I didn't even know that was something that existed when I started investing, so I didn't add to my share position in my account in that way. I did turn on the drip for a couple quarters in 2019, but then turned it off again. One reason is because I'm trying to get some cash out of the market to have enough money for a deposit on buying a house. But also, I felt the price was going up a little high. Of course, it has gone up much higher since then. Currently, TSM is trading around $130 per share. Here's the status of TSM in my account as of January 25th, 2021. You can see the adjusted purchase price I mentioned displayed at $7.89, and that the return on my initial investment is 1,556%. I plugged the numbers into a return on investment calculator, and that figure averages out to an annualized ROI of 18.39%. That's a pretty impressive return. Maybe you are wondering what I did with the rest of the money that I was going to invest, since I had about $600 left in my investing budget after buying TSM. Well, I'm going to tell you because I want people to realize sometimes you buy something and it doesn't do what you expect it to do in your imagined time frame, and so you sell it after a while. On June 7th, 2004, I bought 16 shares of InterActiveCorp, which was trading under ticker IACI for $30.50 per share. The company was described in its annual report that year as a leading multi-brand interactive commerce company committed to harnessing the power of interactivity to make people's lives easier, everywhere and every day. It had a diversified portfolio of specialized and global brands in the travel, home shopping, ticketing, personals, local services, financial services and real estate, and teleservices industries. Some of the brands they held during that time that you'll recognize were Expedia, Home Shopping Network, Ticketmaster, Match.com, and LendingTree. In August 2005, there was a spin-off of Expedia, and I retained 8 of my IACI shares, and the other 8 became 4 Expedia shares. In March 2006, I sold my 8 shares of IACI for $30.50 each. After holding this stock for 21 months, I essentially got back the price that I paid for it. I sold those shares around the time my son was born, so while I don't remember exactly my reason for selling, I probably wanted the money to help cover the expenses of having a new baby. I held on to the Expedia shares longer, finally selling them in July of 2016 for $119 per share, or a total of $476. Those were sold as part of the equalizing of funds during my divorce. That's an okay return, certainly better than it would have done in a savings account, but not quite the home run of TSM. Had I continued holding those 8 shares in InterActiveCorp, which now trades under ticker IAC, today it could have an ROI of 232.41%, not including what might have been gained from other spin-offs such as Match.com. If you are new to investing, I certainly recommend doing research before committing to an investment. If you are typically a financially risk-averse person, it is okay to start investing with small amounts of money. Just getting started, I feel, makes all the difference because as you become involved with the market, your knowledge and interest will grow. If you are worried about losing money, be sure that you are diversifying across different asset classes, in multiple companies, and in index funds or ETFs to help reduce risk. If you really want to grow money, you have to get it out of the bank savings account, where it is earning hardly anything, and get it into the market to make the kind of returns you need to become financially secure in the future. I'm not a financial advisor, but I am an informed investor with a few years of experience. So keep that in mind when watching my videos and listening to my ideas and opinions. Let me know in the comments if you would like to see more videos like this one. If you enjoyed the video, please hit the like button and remember to subscribe for more content on personal finance and personal growth here on Squintillions.